Australia's central bank has opened the door to its first interest rate hike in more than a decade. In its monetary policy decision today, the RBA dropped a previous pledge to be patient that lifted the Aussie dollar to a 9-month high against the greenback. The RBA has left its key rate steady but implied an earlier rate rise. Now, analysts say possibly in August. That will mean no rate rise before the national election that's tipped for next month. But it could spell trouble for stretched borrowers as interest rates head higher earlier than previously forecast. And Roger Maynard tells us what the expectations are for the interest rate path ahead.
There's likely to be an upward movement later on this year, and that could spell problems for some house owners as well as the buoyant housing market, which has enjoyed an unprecedented boom over the past couple of years. On the other hand, higher rates might help to flatten the upward trend, bringing a little sanity to Australia's overpriced property market. The Reserve Bank also has to take into consideration the rising cost of living, the possibility of increased wages as a result of lower unemployment, and the health of the economy generally. The cost of living is Australia's biggest concern at the moment, with groceries, petrol and household goods all on the up. So the Reserve Bank has a delicate balancing act, keeping the people happy and the economy on track. In truth, the economy has performed much better than expected in recent times, and if interest rates do go up, it'll not only increase the cost of imports, but also put pressure on the country's non-resource exports. The big danger of a rise in the Australian dollar is that as we see commodity prices rise in wheat, iron ore and gas, which are doing very well for Australia, it could have a negative impact on import competing sectors in manufacturing and services. So we'll just have to wait to see. But clearly the clock is ticking when it comes to Australian interest rates, and the next step will almost certainly be upwards.